Saving money is important, but it's only part of the story. After creating an emergency fund of 3 to 6 months of expenses, investing in the financial market offers many potential advantages. If we look at the top habits of rich people, firstly, they avoid unnecessary debt. Then they create an emergency fund, and then they invest the rest of their savings, as investing is an efficient way to put your money to work and potentially build wealth. In this video, I am going to share how to invest for beginners in Germany. I will talk about the various investing options like the stock market, crypto, real estate, and commodities like buying gold. Then I'm going to discuss taxes and some of the most important things you need to keep in mind when investing your hard-earned cash. Hey friends, my name is Essen. I'm a researcher, and on this channel we discuss business and personal finance in Germany. If you are watching this video, chances are that you have at least some interest in investing but aren't quite sure how to begin, or maybe you're scared that you might lose your hard-earned money to a scam. Rest assured, I'm making this video to help you get started with your investment journey in Germany. The most important question I get when I discuss investing in Germany is who is allowed to invest. The answer is pretty simple. If you are investing your own money, you are allowed to invest. It does not matter what kind of visa you have, be it student visa, spouse visa, blue card, or PR. Alright, now you know that you can start investing. The first thing that you absolutely need to do before thinking of anything else is create an emergency fund. This fund needs to be 3 to 6 months of your expenses, ideally in a totally separate bank account. If you're looking for a free bank account in Germany, I have a video on free bank accounts in Germany. I'll put a link to that video in the description below. Only after you have created your emergency fund should you be thinking about investing. So you have your emergency fund ready, so let's get started with investing in the stock market first. To invest in the stock market, you need a securities account or a depot konto in German language. You can create a securities account with a traditional bank, for example with Deutsche Bank, Postbank, and many others. Apart from traditional banks, you can also create a securities account or a depot konto with the so-called neo-brokers. There are pros and cons of opening a securities account with both traditional banks and neo-brokers. For example, with certain traditional banks, you get a personalized guidance from the bank employees to get started with investing, but with their expertise and services, they charge a decent amount of fees as well. With neo-brokers, there is an advantage that there are no commission fees and very little additional charges. But the disadvantage is that you need to do everything on your own. But don't worry, it's not that difficult to get started with neo-brokers. Let's take the example of my favorite broker, Scalable Capital. You can open a free account with Scalable Capital within a couple of minutes. All you need is a valid identity document like your passport or your German identity card, an email address, and a valid address in Germany. Once you have completed the online registration process, you will need to verify your identity using post-ident, either using their online app or by visiting your nearest post office. I have a step-by-step video on how to register with Scalable Capital here. There are other free brokers, for example Trade Republic, eToro, Trading 212, and many others. I have videos on explaining the registration process of many of them on my channel as well. Once you have registered with a broker, now you can invest in the stock market. Here is where things get a little bit tricky for beginners. For example, what is a stock? Is it different than a share? What is an ETF? What is a bond? What are derivatives? So many things to deal with. Let's take a breather. As a beginner, you do not need to think about all of these things. The two most important things, in my opinion, are number one, what are stocks, and number two, what are ETFs. Let's talk about stocks first. A stock, also known as an equity, is a security that represents the ownership of a fraction of a corporation. This entitles the owner of a stock to a portion of the corporation's assets and profits equal to how much stock they own. Units of stocks are called shares. This was the definition of a stock. To explain it in simpler words, any company that is publicly traded on an exchange like the New York Stock Exchange or the Frankfurt Exchange can be bought and sold by investors. Investors can do this by trading a stock in its simplest form. Let's take the example of Apple. Apple is a publicly traded company, and you as a private investor can buy and sell Apple shares using your securities account. Buying individual stocks has higher risks compared to an ETF. An ETF or an exchange traded fund is a type of security that tracks an index, a sector, commodity, or other assets and can be purchased or sold on a stock exchange the same way a regular stock can. In its simplest form, an ETF is a collection of stocks bundled together which can be bought together. For example, the iShares S&P 500 ETF tracks the top 500 companies in the United States, and if we buy a single share of this ETF, we are essentially investing in 500 different companies. With individual stocks, we have more risks, as the money that we have invested in the company depends on the performance of that single company. If it performs well, we can get a great return, and if it does not perform well, we can lose all of our money. With ETFs, the risk is distributed. The higher the number of companies in an ETF, the more distributed the risk, but the reward is also distributed. Now you know what stocks and ETFs are. The next question that might come in your mind is which stock or ETF should you invest in? As a beginner, I would say that you should steer clear of individual stocks and look into ETFs. I have a video on how I research stocks and ETFs here if you are interested to know how to pick the best stocks and ETFs to invest in. My favorite ETFs are the MSCI World ETF and the S&P 500 ETF. You might also be wondering how much money should you invest each month. This totally depends on you. I would say start with a small amount and get started. Then once you are comfortable, you can increase your investment amount. Whichever stock or ETF you decide to invest in, with scalable capital, you can start with investment amount of as low as €1. So there's no excuse for you to start investing from today. The next investing option would be cryptocurrencies. This is a very controversial topic. So if you do not want to know about this option, you can go to this timestamp. For those who are interested in crypto investing, please bear in mind that this is an extremely risky investment class. I personally invest a very small portion of my portfolio in crypto, and I know the risk that I might lose 100% of this amount. Alright, now you know about the risks. Let's start with the definition first. A cryptocurrency is a form of digital asset based on a network that is distributed across a large number of computers. This decentralized structure allows them to exist outside the control of governments and centralized authorities. There are many different kinds of cryptocurrencies. The oldest and the most popular is Bitcoin. Some people actually incorrectly use the word Bitcoin when they are talking about cryptocurrencies, so please be careful, as there are hundreds of other cryptocurrencies like Ethereum, Cardano, Solana, Dogecoin, etc. To buy crypto, you generally have two options. The first would be an exchange. It can be centralized or decentralized, and the second would be a broker. Examples of exchange would be Coinbase or Binance. These are typical exchanges where you can buy crypto, trade it, and even send your crypto to an external wallet. I have discussed wallets in this video if you want to learn more about them. With brokers, you can buy and sell crypto, but you cannot move it into an external wallet. Examples of a broker would be Scalable Capital, Trade Republic, and eToro, as it has very complicated transfer policies. I have a step-by-step guide on how to buy crypto using eToro, Scalable Capital, and Trade Republic, which I will put in the description below. Please hit the like button if you're getting value from this video. Next comes investing in commodities. A commodity is a basic good used in commerce that is interchangeable with other goods of the same type. Commodities can be divided as hard and soft. Hard commodities are usually classified as those that are mined or extracted from the earth. These can include metals, ore, and petroleum products like gold, silver, and oil. Soft commodities instead refer to those which are grown, such as agricultural products. These include wheat, cotton, coffee, sugar, soybeans, among many others. In this video, I will only talk about gold. Let's discuss the various ways you can invest in gold while being in Germany. If you are interested in buying gold in Germany as an investment, you have these four options. Number 1, buy gold coins and gold bars in Germany. Number 2, invest in precious metal deposits. Number 3, gold as a commodity on the stock market. And number 4, invest in gold mining companies. Hey friends, my name is Essen. I'm a researcher, and on this channel we discuss business and personal finance in Germany. Let's start with buying gold coins and gold bars in Germany. If you want to buy physical gold, you can either buy gold coins or gold bars. The price of physical gold depends on the weight of the bars and coins. The weight of gold bars is usually given in grams and ranges from 1 gram to about 12.5 kilograms. With coins, the weight usually varies between 1 ounce and 1/10 of an ounce. The price differences between coins of the same weight and bars are relatively small. Usually bars are somewhat cheaper due to their less expensive production. When buying gold bars, make sure it is 99.999% pure and certified by the London Commodities Exchange. Otherwise, you might have to expect a slight deduction when selling those bars. With gold coins in Germany, there is a large secondary market and you can resell them quickly and easily if necessary. These gold coins are some of the most reliable options for investment. Buying physical gold is not cheap. The largest component of cost is the trader's margin, also called the spread. The smaller the weight, the greater the difference, since the production and distribution costs are proportionally higher compared to the pure gold value. So where can you buy gold bars and gold coins in Germany? Well, you can either buy it online or from a physical store. The biggest issue is whether you can trust the seller or not. Suppliers such as Degussa or Pro Aurum have branches in major German cities where you can easily buy gold. The advantage is that you can directly buy in one of the stores from the trusted retailers. The disadvantage is that you usually have to pay more in the branches than on the internet. You can also buy gold from your local precious metal dealer. When buying online, it is not only the cheapest price that matters, but also whether you can trust the retailer or not. You can use online portals such as gold.de or goldpricevergleich.de to get more information about the current prices and reliable dealers. Please hit the like button if you're getting value from this video. Another option for people in Germany for gold investment is the precious metal deposits, where you can buy the ownership of gold which the vendors store in vaults. This form of gold investment is comparable to the purchase of physical gold in terms of security. The cost of a precious metal deposit is usually higher than buying physical gold and storing it in a safe deposit box yourself. For example, some providers charge a fee of about 0.75% of the gold value per year. With this additional cost, there is less hassle as you are not directly handling the gold, but it all depends on the investor. The next option for gold investment in Germany would be buying gold as a commodity on the stock market. If you have a securities account, you can either buy physical gold CFD or physical gold ETFs. Physical gold CFDs are not recommended for beginners at all, as these are complicated products and need at least basic knowledge of how CFDs work. Physical gold ETFs, on the other hand, are one of the easiest ways to invest in gold, as you can buy and sell these ETFs when the stock markets are open. The fourth option for people in Germany who are interested in investing in gold would be to invest in gold mining companies. Historical comparisons show that the price of gold is responsible for a fraction of the price development of gold mining companies. There are many other factors that influence the stock price of these companies, such as the success of the company and the general development of the stock market. That is why this option is not advisable if you are actually interested in gold as an investment. Let's talk about taxes before proceeding to the next investment option. Taxes only come into play when you realize your gains or losses, meaning that you only have to pay taxes when you make a sale. With stocks and ETFs, there is a capital gains tax of 26.75% only on the profit. So if you buy a stock or an ETF at a price of 100 euros and sell it at 200 euros, at a profit of 100 euros, you will have to pay a capital gains tax of 26.75. This tax only applies on realized gains, so any profit you see on scalable capital is only subjected to a tax when you sell that stock or ETF. Gold and crypto fall under the same tax rules. Any gold or crypto you keep for more than 1 year can be sold tax-free if there is a profit involved. In case you sell that gold or crypto within 1 year of purchasing, you can get a maximum profit of 600 euros per year. For crypto, there are certain other conditions which I have discussed in this video. Please hit the like button and consider subscribing if you're getting value from this video. Investing in real estate in Germany. Buying a home in Germany, be it an apartment or a house, is probably one of the biggest goals of many expats living in Germany. With rents increasing tremendously, buying a property instead of renting it might come in the minds of many people. Is buying real estate in Germany better than renting it? That is a very nuanced discussion. But in this video, I want to share 5 points you need to consider when thinking of buying real estate in Germany. Point number 1 is mobility. As an expat, chances are that you're not sure about your future in Germany. Maybe you want to live here for a couple of years and then move back to your home country. Maybe you are someone who just wants the German nationality and want to move to an English-speaking country as soon as you get that nationality. Then it might not be a good idea to invest in real estate. At this point, you might be thinking of buying a property now and selling it if you change cities. That is not as easy as you might think. The German word for real estate is Immobilie, which translates to immobile in English language. That is why selling a property is as difficult as buying one, and you do not want to sell your property when the market is down. Second point is the cost of buying real estate in Germany. When you are looking at apartments and houses on your favorite real estate website and find a nice place that is good and is within your price range, the price that you see on that website is not the actual price that you have to pay. Nope, you have to pay between 8 to 16% additional cost on top of that price. These costs include brokerage commission between 3 to 7%, real estate transfer tax about 5%, notary fees of 1.5%, and land register entry of 0.5%. So an apartment of 300,000 euros would actually cost about 330,000. On top of that, if you want to get your property inspected by a professional, that might cost you up to an additional 1% of the buying cost. Not to mention the renovation cost when you move in, the property tax, and the maintenance costs after buying that property. While selling, you have to pay a capital gains tax of 26.75% if you sell the property within 10 years. Additionally, you might have to pay for getting energy certification, appraisal for the valuation, marketing costs for self-marketing, or broker commission for marketing by brokers. And the most expensive of all, early repayment penalty when selling your home to cancel the loan. That being said, you can save this capital gains tax if you use your property yourself, namely at least in the year of sale and the 2 previous years. Then you can sell your apartment or house tax-free even if the 10 years period is not over yet. This also applies if your children have lived in the property rent-free. Please hit the like button and consider subscribing if you're getting value from this video. Point number 3 is getting a loan. Talking about loans, it is very difficult to get a loan if you do not have a permanent residence in Germany. Even if you have a permanent residence, there is no guarantee that the bank will give you a loan or at least give you favorable rate if you do not put down a decent down payment. Banks in Germany prefer a down payment of 20%, which would come out to be 66 to 70,000 euros on a 300,000 euros apartment depending on the additional costs. Each individual case is different. People without a permanent residence can get a loan. Some might get it without putting any down payment. What I actually want to say is that on an average, banks want someone with a PR and a decent down payment in order to give out a loan. Point number 4 is getting a good deal in an inflated housing market. The German housing market has been extremely strong for decades, but it faces a serious downturn in prices over the next couple of years. Mortgage rates have soared, with a 10-year fixed rate up from 1% to 4% since the start of 2022. House prices have already declined around 5% since March 2022 according to Deutsche Bank data, and they will drop between 20 to 25% in total from the peak according to some analysts. With the current mortgage rate of 4%, real estate investors are finding it a little bit hard to get good deals as rents in Germany are usually fixed, and an increase from 1% interest to 4% has definitely cut into their profits. According to a UBS report, Frankfurt and Munich are in the top 4 of the global real estate bubble index for 2022. These locations have extremely high housing cost imbalances. That said, in larger cities, the amount of residential buildings needed far exceed the available real estate, and the amount of new properties being built is not nearly enough due to the typical German bureaucracy and extreme building regulations. That is why increased interest rates might not affect real estate in major German cities to a larger extent. The 5th point is fear of missing out. If you are thinking of buying a house or an apartment in Germany just because you have a fear of a missed opportunity, I do not think that is the correct motivation. Just because you have been in Germany for a couple of years and people you know are buying properties like a house or an apartment does not mean that you have to buy real estate in Germany. Each case is different, so fear of missing out should not be the motivation for you. Once you have considered all these 5 points, only then should you start looking into buying real estate in Germany. Investing in a business is one of the best things you can do as an expat in Germany. But this will either require a large capital or a large amount of your time. Usually people in Germany have a full-time job and starting a business might not be for everyone. But if you're one of those people who wants to start a business, then let's begin with the most important question. Who is allowed to start a business in Germany? People on the blue card or regular work permit are not allowed to register a business in Germany. For students, in order to start a business, they would need permission from both their university and the Ausländerbehörde. This permission is pretty hard to get and can be very time consuming. So who can register or start a business in Germany? Well, if you have a permanent residence, then you can easily register a business in Germany. Obviously, German nationals can register without any issues, and EU citizens have also almost no restrictions as well. If you just want to invest in a business set up by a friend or a family member or someone else and you are only going to invest your capital, then you can do that with any visa. But it all depends on how the business is set up and how the contracts are made. So please consult a lawyer before partnering with anyone. To start a business, you will need to register a company. You have multiple options to do that. You can start a business as a sole proprietor, start a UG, start a GmbH or an AG. Each business type has its own requirements, which I have discussed in this video. The easiest option would be a sole proprietorship, with which you can start a bakery, a store, start an online business in Germany, etc. Again, each type of business has its own specific requirements as well. You can always start small and register a business as a side gig along with your full-time job, but remember that you have to inform your full-time employer about your business, and that your side business cannot be in the same field as your full-time job. This would be considered as competition with your main employer and can result in job contract termination from your full-time job. So please be careful and ask an expert before starting anything. If you want to register a business in Germany, I highly recommend you watch my step-by-step video explaining the complete process. Next option, and I think this is the most important investment you can do, and that is investing in yourself. Improve your German language skills. Take a course that can help you land that next promotion. Work on improving the skills that you already have. Invest in your health. Bleib gesund, and I'll see you in this video.